Welcome to TheoTrade. This is Don Kaufman. It's June 18th, 2018. You are watching the Theo Night video. Well, to begin with, on this Monday, well, we almost sold off. Almost. That is, the S&Ps here with just about 10 minutes left in the trading day are down about 6 points. Now, for those of you that did watch this morning, they were down well over 20 at one point. We have rallied well off the lows. The Nasdaq was also down in excess of 50 handles earlier today, coming back, people, to almost massively unchanged by the close. You just cannot keep a good market down. But with that, it really has become this kind of tale of two very different markets. And I want to explain that statement to a larger degree. First and foremost, what I'm taking you into here, and I'm gonna close up this left side bar with just a few minutes left in the trading day. You're looking right now at the Nasdaq 100. All right, it's the Nasdaq 100, and all I'm showing you happens to be the advanced decline line on it. Now, this morning, the advanced decline line here was in excess of 91 products to the downside, yet the marketplace happened to be effectively rallying. One thing I'm trying to get you to see is that inside of the Nasdaq, okay, it's all about the monsters of tech. Now, for those of you who have never tuned in kind of on a day-to-day basis and you've never heard me talk about the monsters of tech are this kind of conglomerate symbol that I happen to build specifically into thinkorswim. You can do this on most brokerage platforms. So it's Facebook plus Apple plus Microsoft plus Google plus Amazon, and I've kind of ratioed all of it together. It's 5.8 times Facebook, kind of ratioed it together. And what you're seeing specifically today is the single largest divergence that I have ever seen in the last 2.5 years since we built this kind of conglomerate symbol. And that's the largest divergence between the monsters of tech themselves and the Nasdaq futures. And in effect, what you have over here is the monsters of tech are up 55, but more importantly, they're up about 0.8%, with the Nasdaq largely unchanged. But I also track the point differential, and you're looking at about a 60-point differential, which is spectacular in terms of the divergence that we're effectively seeing here. Again, a spectacular divergence. And if you're looking at the bigger picture, okay, so what does this mean? It means effectively, okay, you have 5 stocks holding up the entire marketplace when it comes to the Nasdaq. All right, Microsoft's playing into this. The irony is Apple, which is the single largest market cap, did not participate to the upside today. It's Facebook. It's very specific to Google. Okay, and last but definitely not least, of course, Amazon. And what's even more interesting on this front is when you really start to look at it, Amazon underperformed today. Apple underperformed today. Okay, it's Facebook, it's Google. Microsoft performed pretty much in line with the monsters of tech. But again, we're down now to 2 or 3 underlyings. And okay, on top of it, there are a number of key products inside of the Nasdaq that happen to be displaying broader weakness. One of those happens to be none other than Intel. Now, Intel I use as kind of a litmus test for the entire Nasdaq. When Intel is weak, and it has been weak here the last 2 weeks, okay, I often will step in, okay, and look for some short positions in the Nasdaq. Now, this is something very contrary to what I was talking about a bit last week. Okay, last week in this weekend's update, I was detailing that I had not taken any bearish positions inside of the Nasdaq. Okay, in fact, I even detailed how I've been shying away from the Nasdaq. Well, this to me is a much broader sign. You have only a handful of underlyings that clearly, okay, are trying to prop up markets, but happen to, in fact, be failing. Specifically today, again, the Nasdaq is going to close on the trading day, slightly down with the monsters of tech up 55. This to me begs all right, for a trade to be built inside of the QQQ. Now, well, what are we going to step in? What are we going to build inside of the Qs? If you're looking for just kind of a mild, defined risk type position, just go after an in-out spread. We're 32 days out in time. We can go after an in-out spread. For those of you that have never seen me build an in-out spread, here we are at 176.5. I'll come one strike in the money, one strike out of the money. Okay, and I'll use, okay, in this particular instance, I'll use right around this time frame, okay, of about 32 days out. And I'll go ahead and route this one right at around the mid price, okay, see if it fills. And again, if you're comfortable, this thing should be priced in and around some 76 cents. I'll go ahead and create a duplicate order. See if we can't get filled here at 77 cents. Just a few minutes to go to the closing bell. Now, 32 days out can be rather effective, but in this particular trade, and I'll dupe the order here again. Let's go in here and create a duplicate order. In this particular trade, I'm going out there and I'm risking some 77 cents, and I'm trying to make about 55% on that 77 cents that I'm risking. Okay. Now, some of you may say, yeah, you know what, Don, I think I want a little bit more risk. I want a little bit, I'll kind of want to go for it. Well, you could amplify contract size in here. Obviously, that would be one way where we could actually create a bit more risk. But initially, in taking these first couple of stabs into the Nasdaq here, as I said, I believe that the monsters of tech diverging to the upside, okay, with the Nasdaq weak on a relative basis, is going to provide us one of the best situations that we've seen in quite some time to be able to take a short position in the Nasdaq. The Nasdaq as a whole, okay, is not going to fare well in maybe days or even weeks to come. And again, this is one of the first and broader signs of weakness that we've really seen. And what has been, okay, and I want to make this clear, the Nasdaq has been the unstoppable force to the upside. Again, on a day where the S&Ps were down 20, the Nasdaq was down 50, 60 handles this morning. It's the monsters of tech that rallied us out of that. But the Nasdaq, although it followed suit, this huge divergence started to appear. Again, I'm going to start with this on this video of just coming in here and doing this $2 wide spread. And we're going to elaborate more upon that coming up in the next few days inside of the TheoTrade chat room. The other aspect that you'll want to be mindful of, okay, today, Monday, most Asian markets happen to be closed for a holiday, and therefore the bond market, okay, did not play a larger role inside of today's trading in the U.S. Asian markets have a very large impact on the U.S. bond market. You can see the U.S. bond market, I mean, literally massively unchanged on the trading day, as is the notes. And they're doing, just about a little over maybe half the volume they typically do on a day-to-day basis. That, in fact, okay, had implications back over to the financials. The financials early in the day had sold off. They had rallied back a little bit, but they're still not the kind of oomph, not the kind of volume that you would necessarily want to see in kind of a rally back in these financials. So a tremendous amount to think about in the next couple of days, but specifically in trying to make a very bold call over here, I think it's time finally to step up and to short into that Nasdaq with a defined risk trade. Thanks everybody for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.